Hello, everyone. This is Resi Insurance Fellow. We are keeping Carolina families covered. It's great to be with you all. Today, I get to talk with you about infinite banking. You probably have heard it in the news. You probably want to know what it is, but we're going to tell you. I'm going to key in on four distinct things as it affects this. We're going to talk about what it is. We're going to talk about how it works, the pros and the cons. We're also going to talk about who are good candidates to use these type of concepts. Hope you're excited about it as I am. I always love the opportunity to help people. So, if you're on here and you view it, don't forget to like, don't forget to share, don't forget to subscribe. Don't forget to comment if you want. Feedback is always important. So, this is going to be good. So, let's get into it. You've probably heard on TV or in the news or things that you've read what infinite banking is. Let's look at what this really is. And I got notes here because I want to make sure I give my viewers the right information to the best of my ability. I think that's only right. Infinite banking is a financial strategy that leverages the cash value of a permanent life insurance policy to create a personal banking system. This concept was popularized by R. Nelson Nash in his book, Become Your Own Banker. I've read it, it's a very good book. The idea is to use cash value of a whole life insurance policy as a source of funds for personal or business needs, rather than relying on a traditional bank or a lender. We're going to look at how this works. We're going to look at the benefits. We're going to look at the drawbacks. But let's look at how this works. We defined it. Let's look at how it works. The first component of it is you need a whole life insurance policy. This strategy involves using a specially designed life insurance policy. That the insurance has to have guaranteed death benefits. It has to have a fixed premium. It has to have a cash value component that grows over time. Those are the three things you've got to have in that policy to be able to use this concept. Cash value accumulation. Over time, the policy accumulates cash value, to the point where it can be borrowed against it. It can take some time for that to happen. That's why this is a long term strategy as opposed to a short term strategy. The cash value grows tax deferred and it can be accessed through using policy loans. The policy loan. The policyholder can take out a loan against the cash value of that policy. The loans are usually at favorable rates, and the policyholder is still responsible for paying them. But your chances of approval are very good when you're borrowing from yourself as opposed to a traditional bank or a lender. So let's look at this. Repayment and growth is our next one. It's a loan just like any other loans. And when loans are repaid, the funds go back into the policy's cash value, which can continue to grow and earn dividends. The goal is to create a cycle where the policyholder can use the cash value for the various financial needs and to be able to replenish it with the loan repayments. So there's always a constant way to be able to have money to do whatever is needed. Self financing. By using the cash value for personal business needs, they totally bypass the traditional banks and financial institutions. You're gaining more control over your financial resources using this method. And also potentially earning a return on your investment. Okay, we've talked about what this is. We've talked about how this works. Let's look at what the benefits are. There's five major benefits from this, and I'll share them with you. The first one is control and flexibility. Anytime that you've got greater control over your financing needs, it's going to allow you to put yourself in a better position. When you can borrow from yourself and be able to repay on your terms, that is usually a major win for whoever it applies to. Tax advantages. The cash value grows tax deferred, and policies that are loans that are taken out are considered not considered taxable income. There's a reason that loans are never taxed. They're not considered income. Loan repayment flexibility. Loan repayment flexibility is when a policy holder they have they can they've got a little more of a say on when and how frequent that they get to pay back that loan. That is a major advantage. And they can make those options at their own pace. Where a traditional bank and lender, of course, you're going to sign something stating you're going to pay X number of dollars at this next number of rate over however X number of months that you agree to do that, and you're signing something to it. And more than likely, you're not able to decide that term. That policy, that bank or that lender is. Asset protection. This is a major one. In many states, the cash value and the death benefit of a life insurance policies are protected from creditors, providing a certain level of financial security. So we talked about what this is. We have talked about how this works. We've talked about the benefits of this concept. Now let's talk about some of the drawbacks and risks. Now let's be fair. In any financial strategy, you have benefits for using it, and there are potential risks that come from using it. Let's look at that because I want my viewers to know all of this. The cost of insurance. Whole life policies can be expensive due to their high premiums and fees, especially in the earlier years. And these costs can impact the cash value. The second one is the complexity. This type of concept is really good by people who already know how life insurance policies work and understand how loans and dividends work. Third, the loan interest. When policy loans have favorable terms, they still accrue interest. And when they're managed properly, the interest can erode. If not managed properly, the interest can still erode the cash value. So you always got to look at that. Slow cash value growth. This is a long-term strategy. It's not intended to be a short-term strategy. So it might take years to be able to for that policy to be able to get enough cash value to be able to borrow against it. This is why a lot of people they have their children start young with this, and they'll have them create accounts and be able to use this type of concept and use a life insurance policy against it. So when they get at a certain age, there's money available to possibly get that first car, or to be able to get a down payment on a home, or to be able to partially fund their college education. I'm sharing with you a lot of the stuff that people do that they really don't tell you about, but it's been there. It's one thing about information. Technically, this information is available, but it's not always accessible. And when people who have access to the information are able to use it and to act upon it. The fifth one I want to talk to you about is the impact on the death benefit. If you look at a life insurance policy and you take out a loan against it, it will affect the benefit. And when a person decedes while they have a loan outstanding, they will you have the cash value, then you have the loan. Say that person decedes. Subtract the loan from the death benefit, and that is what the beneficiary will receive in that case. They just deduct the amount of the loan from the death benefit. So that can be a risk when you do that type of thing. So we've talked about what it is, how it works, the pros and the cons. Let's talk about who are ideal candidates for this type of concept. You have long-term planners. These are people that are committed to using whole life insurance as part of their long-term financial strategy. They've done their research, they've done their homework, or what they don't know, they're willing to ask someone, and they have a good understanding that if they use this concept, how it's going to benefit them. The second group are your high net worth individuals. These are the people who earn a lot of money and they know, and can afford the higher premiums, and they're looking for additional tax advantage savings, and they understand the value of this type of concept and how it can help them grow their wealth, or to be able to put it in places where they need it. Entrepreneurs and business owners. This is usually an alternative to traditional lending or traditional business financing methods. Because if you have this available to you and you're able to take out a small loan to fund your business needs, it could work to your advantage. Or you got financially savvy individuals, those that are comfortable with managing insurance policies, understanding the mechanics of loans and how they work, and they're already planning for their financial needs. So it's not a matter of what strategies they're going to employ, it's just a matter of which ones they're going to use. These are your ideal candidates, but in reality, anyone with the information would be able to use it to their advantage. And that's why professionals like myself and so many others, we want to help people to make sure that this information is not just available but also accessible. All right, we talked about what it is. We've talked about how it works. We've talked about the pros and the cons. We've talked about who would be an ideal candidate for it. Here are some additional considerations that I would want you to consider. Before adopting an infinite banking concept strategy, I want you to consider the policy. Consider That's the first one, the policy, the type of policy that it is, the policy design. Find out if that policy is designed to support that type of goal. And you do that through getting the advice of an actual financial advisor or an insurance expert who is qualified to be able to give you the right information so that you're able to make the best decision that you can. Cost analysis. Always look at the cost of insurance, no matter what type of product you use, before using any type of concept in in conjunction with it. Always look at the policy, look at the cash value, look how it may grow, what could happen if you take out a loan against it, and how it could affect it in the future. That's your cost analysis. You're looking at all of that. In financial or insurance speak, we say it a different way, but everyday people need to know how this works for them, and that's how I try to explain things. Consider this is a long-term strategy. This is one of those things that you employ and it takes years to be able to get the full benefit of it. The strategy may require years of premium payments before that cash value accumulates to the point to where it can be used for this. That is why they start people out with a younger and to be able to have those funds years down the line to be able to use them at a later date. And last but not least, always anything dealing with finances, insurance, seek out the advice and guidance of a qualified professional that can guide you in terms of how this stuff works, that can tell you that understands the implications of the strategy that you use and making sure that it's going to meet your needs. Don't get JoJo or Ray Ray on the street to get you to talk about this, and they don't have an insurance license or they're not qualified to talk about that area. People with the license, they know about this stuff. We're trained about it, we know about it, we have experience with it, and we're going to help you with it. And what we don't know, we will get the people who do know so that you can make the best decision possible. This is Reg, the Insurance Fellow. I thank you for being here with me for this period of time. This is Life Insurance Awareness Month for the month of September that this is being recorded. So when you see this, you'll also be reminded that September is very important. Life insurance is for everyone. It's not for certain groups and not others. I want to say this so that you know. Infinite banking concept is a strategy. It is not insurance, but it shows you how to use insurance to help you accomplish what you want to do within your financial picture. That's what makes this strategy so very powerful. If you go ahead and share, go ahead and comment, go ahead and subscribe, and we will keep more of these coming for you and anybody that you know that needs this information. This is Reg, the Insurance Fellow, and it is always my duty and pleasure and privilege to keep Carolina families covered. Thank you so much. Have an awesome day.